Welcome to the Nation Diplomatic Dispatch, your window into the world of diplomacy and international affairs. Recently, the IMF said the US tariffs will weaken the global economy and push up inflation in 2025. Now, to better understand how the rising tariffs may impact the global economy, particularly Malaysia, joining me today is Dr. Geoffrey Williams, the founder and director of Williams Business Consultancy, Sendirian Berhad. Welcome, Dr. Geoff.
Nice to be here.
Right. So let's dive straight into this conversation. Last week was President Xi Jinping's visit to Malaysia. Let's talk about how important his visit was, amidst the ongoing chaos in the global trading arena brought on by the tariffs that has been imposed by the US on 168 countries.
I think it was very important, but I think we have to remember it was planned ahead of the tariff announcement.
Right.
Dr. Sri Anwar went to China, I think in November last year, wasn't it? It was a big trade visit, and there was a promise then that there would be a reciprocal visit coming back. So it's not the case that the visit by the Chinese president is a consequence of the tariff issue, but it's very useful.
Was it a timely visit?
Very timely and very useful, particularly because it was a three-country visit involving Cambodia and Vietnam. And the visit to Malaysia is particularly useful because Malaysia is the chair of ASEAN. So what we saw was an opportunity for the Prime Minister, both as the Prime Minister in Malaysia but also as the chair of ASEAN, to get a good idea of what it is, what's the Chinese position on the issue, to continue with very good long-term relationships that Malaysia has with China, which have lasted for decades, and to, I think, reaffirm that long-term relationship, notwithstanding the short-term issues to do with the tariff.
Right.
All of that's extremely positive.
Right. Seeing as how Malaysia's two biggest trade and investment countries are China and the United States, now we've got a trade volume in 2024. Trade has exceeded $212 billion, and that's marked a record high. With the US, trade volume reached a number of $35.5 billion US, and that's the second highest value recorded. With the tariff wars, gaining a feverish pitch, with Washington imposing a staggering 245% on China, what are some of the implications for a small economy like Malaysia? Does it seem as if we're stuck in a situation between two warring economic giants?
Well, yes, but not necessarily stuck.
Okay.
It's obvious that the main concern for the United States, and particularly President Trump, is the position with China. And this is a long-term thing. This is not just something that turned up on Liberation Day, as they called it. This has been going on for decades, actually, under many administrations. And that arises because China is the second largest global economy.
Right.
And it's been growing very sustainably and very significantly. It's now involved in very large overseas investment programs through the Belt and Road Initiative. And in terms of trade, the United States has been running a significant long-term structural deficit with China for decades. So it appears to me that the real concern is the balance of economic power between the United States and China, and the other trade and tariff issues which affect smaller countries, some quite large. The European Union is not a country, but taken as a single entity, it's very large. So those matter, but it's not necessarily the case that countries like Malaysia or countries in ASEAN need to be at the heart or at the core of that battle, the trade battle between China and the United States. It's very important that smaller countries look at their own national interest, the interest of their immediate trading partners, and cut a deal. Actually, that's the most important thing.
Right. Let's look at the 2025 World Bank Group IMF spring meetings, which have opened in Washington, D.C., and it's scheduled to run through April 26. Now, the U.S. tariffs and also their impact on the global economic will be an important focus of this year's meetings. Now, according to projections, which will be released this week by the International Monetary Fund, surging US tariffs will weaken the global economy and push up inflation this year in 2025. Now, in your assessment, what would be the end game of this tariff war and the ultimate impact on smaller economies like Malaysia over the long term? Now, there are comments saying that this tariff war will extend to 2028.
No, I don't see that. I think, to cut a long story short, my view is that the end game will be extremely positive for everybody, provided countries don't get dragged into this World Bank, IMF mainstream narrative that this is belligerent and aggressive activity on behalf of the United States and we have to stand up against it and all of that. If people just step aside from that emotion and look at it rationally, then what we're actually seeing is something like this. The Americans have said we have long-term structural imbalance of trade with many countries, which has gone on for decades since the 1970s. That's true. No question, that is true. Then they say at least a part of this is because of restrictive trade practices. The rest is normal trading activity. That's also true. At least part of it is because of restrictive trade practice. In Malaysia, we cannot say that there are no restrictive trade with approved permits and all of that. You cannot say that there are not restrictive trade practices. There are. Every country in the world has one form or another of restrictive trade practice. So the Americans are saying part of this structural deficit that we are experiencing is because of restrictive trade barriers, and that's true. So they're saying we're not going to go through line by line and regulation by regulation and tariff by tariff and non-tariff barrier by non-tariff barrier. We just do a really rather crude, admittedly, estimate, and we're going to impose this reciprocal tariff on you, half of what we think it could be, by the way. So it's not that harsh. It could be worse, right?
Not so bad.
And not so bad. And they say half of what it could be. And if you think that it's unfair, pick up the phone, or come and visit us and we will negotiate. And that's exactly what has happened.
Right.
So we had first 50 countries, then 70 countries, then 75 countries starting negotiations. If you take the European Union not as a single entity but as 27 separate countries and add that in, that's 102 countries. Canada and Mexico are dealing with separately. There's 104 countries that are now in active trade negotiations to reduce tariff barriers, non-tariff barriers, and restrictions on trade across the world. I have never seen that, actually. And that's why I say within 7 days, Donald Trump has achieved more than the World Trade Organization has achieved in 78 years. The question is, what will be the outcome over the next 90 days?
Right.
And if economies and governments set aside the emotion, set aside the narrative of we must stand up to a belligerent United States and get involved in sober, rational, straightforward, unemotional discussions on which tariff barriers can be removed, which non-tariff barriers can be removed.
Right.
We can positively look forward to a world of lower trade barriers and therefore, as a consequence, higher free trade arrangements, and everyone is better off.
So there is a possibility of a positive outcome from, the...
I think it's more than a possibility. I think it's a probability. That's the most probable outcome, is that things will be better. Yeah.
We're going to talk about the exports within the ASEAN market, but we're going to take a very short break, and we'll be right back with you with Dr. Geoffrey. Don't go anywhere.
Okay. I'll stay here.
You can't go anywhere.
No, cannot.
Welcome back. We're on The Nation. On today's edition of Diplomatic Dispatch, talking to Dr. Geoffrey, we're talking about the impact the US tariff will have on the global economy. Let's talk about the ASEAN market. Now, there is concern that with the tariffs imposed on China, that Beijing might look to increase its exports to Southeast Asia instead, and this includes Malaysia. Last year, 16% of Chinese exports went to ASEAN out of its total exports of 3.5 trillion US dollars. Are we going to see more competitive products from China flooding the Southeast Asian market, including Malaysia? If so, is it going to be worrying that it might hurt local producers and manufacturers as well as exporters?
Okay, what we saw in terms of Chinese exports just ahead of the tariff announcements on Liberation Day, we saw a massive increase in Chinese exports to the United States because they were stocking up. So all of those will be in the warehouses, and what will happen is that the availability of Chinese goods in the United States will remain high, but will taper off as they're used up from the inventories in the stocks. And so we saw a massive increase in exports, and it's going to collapse. It is. There's no question about that. And that's partly because they pushed it all into the first quarter in order to build up stocks.
Right.
So where then, this is the question, where then will the Chinese want to send their products after that? Now, obviously, ASEAN or Asia as a whole is a big market in terms of the number of people and the purchasing power. And actually, because many countries in ASEAN are relatively low income, people want cheap products.
Right.
And often they can't get that from local producers. Many of the products are already imported from China. China will find it difficult to look at another big market like the European Union, because the European Union is one of the most restrictive trade zones in the world. So they will have difficulty selling their products over there. So yes, there may well be a shift of cheaper Chinese products into the ASEAN region. Question then is that a problem? Well, actually, what it would do is to make consumer products lower, cheaper, and also products for business-to-business type component products. But that would make that cheaper. So it's not obvious that that would be a bad thing. Consumers would be better off. They'd have access to more products at a lower price, and so would businesses.
Right.
If that continues into the longer term, and that starts to harm the competitiveness of Malaysian, for example, here in Malaysia, harm the competitiveness of Malaysian suppliers of similar types of products, yes, then that's a big issue. But then that's all about the question of, will this tariff war go on for a long time, or will it be cleared up at some point in the middle of the year? And President Trump keeps telling us that he expects China to come with a deal. Well, if that's true, we may not see an extended trade conflict.
Well, let's hope that happens sooner rather than later.
Well, let's hope so, yes.
So let's talk about our trade deficit with China. Now, reportedly over the past 13 years, we have been incurring a persistent trade deficit and also in boosting bilateral trade. Is there an avenue for Malaysia to work out a more equitable agreement with China to enable more Malaysian exports to penetrate the Chinese market? Because it's a huge market in China.
I think the answer to that is not quickly. Because one of the reasons that there is this trade deficit is because of the type of products that Malaysia sells. For example, one of the biggest exports that Malaysia has to the United States, nearly half of Malaysia's exports to the United States, are electrical and electronic products, semiconductors.
Right.
Well, the Chinese don't need to buy those in the same way because they produce it themselves. So another big area where Malaysia sells to China is in basic commodities like palm oil.
Right.
And Malaysia doesn't sell very much palm oil to the US. It's less than 1% of exports. But China and India are both big markets for Malaysian palm oil because of the number of people. Now, it's difficult to change that trade balance because it means you have to change what you're producing in order to make products that are attractive to Chinese consumers. And they have to be more attractive than what they're producing themselves. So it really is only in areas where China can't produce that Malaysia has potential opportunity, and that means it's not a quick fix.
Right. And so what are the export sectors that Malaysia can work on for us to be more competitive in order for us to be able to export more products to China, for example?
I think we do have to look at some of the traditional export areas on which the entirety of Malaysian development since the 1970s has been built. And that is oil and gas. There may be 15 years of known resources from Petronas, but perhaps 45 years. So oil and gas has been a huge export area. Palm oil has been a huge export area. But in both cases, particularly in palm oil, it's important to move up the production quality ladder. Rather than just selling crude palm oil, selling processed palm oil, which is higher value added. Now, the Malaysian Palm Oil Board is really pushing on that to try to sell higher value added products from palm oil, but palm oil will always be a significant contributor in Malaysia. Then, of course, there is the area of electrical, electronics and semiconductors. That also has to be moved up the value chain rather than just providing basic products, particularly in semiconductors. And there is a national semiconductor strategy to try to do that. And also not just looking at trading goods, but also looking at trade in services. Tourism is a huge earner for Malaysia, and a very big chunk of those tourists are coming from China. And that is a very positive, and always has been a very positive, mutually happy relationship. We like to see Chinese tourists, and Chinese tourists like to come here. So improving that also. But again, it's a question of pushing up the quality ladder.
And also, I suppose, perhaps it's time for Malaysia to explore new markets as well. But we're going to talk about that a little bit more. We're going to go for another very short break. Don't go anywhere. Again, I still have Dr. Jeffrey with me.
I'm not going anywhere.
We'll be back. We're back once again, still with Dr. Jeff. Okay, so you mentioned about the semiconductor industry. Now, one of our biggest exports to the US are integrated circuits, semiconductor devices, broadcasting equipment, and also optical instruments. Now, just speaking on that, how crucial is it for Malaysia to upgrade its semiconductor industry, so for us to move from being involved in back-end manufacturing operations to move forward to higher-end or front-end manufacturing integrated circuit design? Is that going to help us?
I think it is, and there is a national strategy, as I mentioned just before, to try to achieve that. That involves quite a lot of investment in human capital, as well as the physical infrastructure, but it's really the human capital that's extremely important in that development process. And so it's not a quick thing, but then it's not the longest thing. It's not the worst thing. I mean, it is a sort of medium to long-term aim, which has already started. That's important. That's the most important thing. It's already started. But you also have to keep ahead of the game. It's all very well to say, well, we're going to move up the value chain, but then the value chain is going to move on. So you have to both move up and move on.
Let's talk about new markets very quickly. What do you think are some of the new markets that Malaysia should attempt to penetrate, and also perhaps new export products? Earlier on you mentioned services, that we shouldn't focus too much on products alone.
I'm not keen on cherry picking particular geographical locations as potential markets. You can obviously point to India because it is such a huge population, but then you could equally say ASEAN is also very large, and why cross the Indian Ocean when you need to?
We've got Indonesia.
Exactly, you have Indonesia sitting next door. So I think the first thing is to strengthen strengthen and deepen economic trade relationships and investment relationships across ASEAN. But that requires liberalization. And there has to be a liberalization agenda, particularly, movement of people, movement of capital, being able to set up businesses and representative offices in different ASEAN countries easily and straightforwardly. So that has to happen. But then again, that's not a quick thing. If you look at the example of the European Union, that took decades, 50, 70 years actually, in order to achieve that. But you have to start that process quite actively. So
are we on that path forward? I mean, if we were to look at it, ASEAN could very well be a similar union to the EU. Is that
no.
Is that a
you don't want
direction that we want to move towards?
No. That would be an absolute disaster. What you need across the ASEAN countries is not to create this, as they have done in the European Union, this fortress Europe with massive external tariffs and non-tariff barriers, so you can't get in if you're not a member. No. ASEAN must have a wholly different vision, which is to be open to global trade as well as to deepen and broaden trade amongst the ASEAN countries themselves, and try to encourage companies to, for example, to come to Malaysia with the complete expectation that they can trade easily everywhere. And some of the things that we've seen which are interesting, like this digital nomad idea, although this is not a sort of massive manufacturing scale activity, if you had coordination of the digital nomad visas, you would have many service providers, many micro enterprises creating a great deal of value, set up here, easily move around. But that just very simple thing requires coordination and cross-recognition of those visa issues, that type of thing. And that's a wholly different thing to what you've seen in the European Union, which has actually moved from a trading area into a geopolitical bloc. Now is involved in defense. ASEAN must not go down that route. It must be an open free trade area, removing tariffs and non-tariff barrier trades.
Just on that note, do you think ASEAN possesses the economic clout to engage both the United States and China on an equitable basis?
Yes, but I don't think they should get actively involved in these two rutting elephants. But they can, because they are important trading partners and have been for decades. Donald Trump will be here today and he will be gone in 4 years.
Well, we'll see about that. But I mean, it's been a very insightful conversation with you, Dr. Geoffrey. Thank you so much for
been a pleasure.
spending time with us on The Nation Diplomatic Dispatch today.
I wasn't very diplomatic.
Well, that's all right. Differences of opinions is completely fine. Now, from the shifting trade dynamics to Malaysia's positioning on the global stage, it's clear that navigating the US-China tariff conflict requires strategic foresight and regional cooperation. We'd like to thank Dr. Geoffrey Williams once again for his valuable insights into what lies ahead for Malaysia and ASEAN. I'm sure a lot that couldn't be said on live. I'm PASHA RAHIM. This has been Diplomatic Dispatch, for your window into the world of diplomacy and international affairs. Thanks for tuning in. Keep on watching Bernama TV for more news. You can tune into all of our social media channels, and also don't forget to tune into Bernama Radio at 93.9 FM for updates. That's all for now.